Hey guys, all content discussed in this channel is due diligence gathered with aim at better understanding the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. Quick note, this morning's video has been added to this video, so if you missed it, you don't have to click off and search for it as it has been stitched to it at the end. Stocks continued moving upward today even amidst continuation of further inflation and a conflict in Ukraine that doesn't seem to be stopping anytime soon. The S&P 500 and Nasdaq both gained over 1%. Elon Musk disclosed he now owns 9.2% of the stake of Twitter. The Dow Jones also ended the day green. The European Union said it's working to further sanctions against Russia. Germany's defense minister also said they would be supporting banning Russian natural gas, and U.S. crude oil prices advanced as a result. Head of J.P. Morgan Jamie Dimon publicly warned of very volatile markets to come as the Fed tightens monetary policy. He told investors he understands that the Fed is taking heavy measures to combat inflation and end its ultra-loose policies, and urged people not to worry about volatile markets unless they affect the actual economy. Dimon wrote that if the Fed gets it right, we will have years of growth and inflation should begin to recede. In this process, there will be a lot of consternation and volatile markets. Jamie also added that short-term borrowing costs need to be higher to address the rapid pace of price increases, suggesting that the Fed could lift interest rates more than 2.5% this year, as some betting markets have already begun to price in. You see, all these Wall Street analysts and CEOs are telling us, now on the daily, to not worry. Their reasoning seems to split the economy between the numbers, which are bad, and then allude to the real economy, which they say it's fine. I am guessing by real economy they mean the job market or whatever cherry-pick statistic they used, but it is most definitely clear that inflation will have insane and wide ramifications. Wall Street is reminding me of the Chinese government, telling me not to worry about anything while the house is on fire. Thankfully, I am not alone in this train of thought. Former Fed Governor Lawrence Lindsay said today that higher inflation will force consumers to limit their spending so much that the economy will slump into a recession, and I totally agree. I mean, look at the energy sector alone. Inflation is so out of control and eating heavily into consumer spending power that they will be forced to cut back on it, and we all know that the kryptonite of the economy is when people stop spending. The former Fed governor also said that the central banks are nowhere near close to being able to tame inflation, a sentiment I too have shared many times. He thinks it's going to push consumer purchasing power down by 2 points on top of the 2.5 points it has already declined. Consumer inflation hasn't risen 1% for more than 2 months straight since the summer of 1980. Things are definitely not looking good whatsoever, so be wary of all these green bullish days with the benchmarks progressing upwards. Today we didn't get any news from GameStop or AMC in particular. I do have to note that I have been seeing more engagement on social media surrounding these two stocks though, which is great. Before we go over today's performance, let me point out my 2 best day trading alerts on Discord. Both of these 2 stocks were alerted early in the day and both ran over 15% after the initial alert went off. Come join my Discord if interested in day trading or are looking to have meaningful conversations surrounding GameStop and AMC content. We have tons of things going on with a very active community of over 5,000 members. Now, let's talk about performance. The Fed submitted over $1.692 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 56% of the total volume today, while dark pool trades for GameStop accounted for 56% of the total volume today. AMC had a larger amount of buy orders than sell orders, with GameStop also having a larger amount of buy orders than sell orders. AMC had a bullish day, gaining over under 1%. The stock traded fairly neutral during the pre-market. Once markets opened, it jumped up before dipping all the day down below 22. After this dip, it bounced up back above 23.40 before beginning to consolidate. AMC dipped a little bit again, this time higher than the previous low though. With a small bounce, AMC closed at 23.31, above the VWAP. As for tomorrow, support should be found at 23, 22.60 and 22. Resistance will be met at 23.30, 24 and 25 for the most part based on historical support and resistance charting. GameStop had a bullish day, gaining over 3% for the day. Upon market opening, GameStop began dipping, reaching 156.63 at its lowest point. After this dip, GameStop began running up and consolidating high above 168 for the majority of the day. It ended up closing at 170.73, above the VWAP. As for tomorrow, support should be found at 168, 162 and 160. Resistance will be met at 173, 176 and 180 based on historical support and resistance charting. On this next part of the video, I am simply going to copy and paste this morning's video segment for those interested in listening to it. If you want to skip that segment, I want to thank you for tuning in today for this short afternoon recap. I wish you an amazing rest of your day and to the moon. Hey guys, all content discussed in this channel is due diligence gathered aimed at better understanding the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. Hope you guys liked the new shortened intro. I have been compiling a lot of requests and looking at the grievances of some of my viewers, and it seems most of you hate long intros, so I have adapted my videos to shorten some of the least liked commonalities while retaining the favorite sentences and parts that make this channel unique, like the "Hey guys." So, as promised, we are back in the morning video grind. It's been a while since we last spoke about the disaster that is the housing market, and since then, things have worsened a lot. Today we are going to talk an update on what the housing market stands as of now, for the economic shocks that have surged as a result of all the conflicts and events in the globe are having bigger shocks on the housing market. It is pointless to say that if you are a new home buyer, your problems just went from gigantic to titanic. The average fixed mortgage rate hit 4.67% as of last Thursday, where just a week earlier it was around 4.42%. Back in December of last year, it was at 3.11%. As you can see, the rates grew more than 33% in the span of just a couple months. The media and government will acknowledge things are bad, but what they are too scared to tell you is the most obvious thing. Borrowers are losing their mortgage eligibility, meaning it will be harder and harder for new home buyers to find affordable housing. Even borrowers who maintained good credit scores and overall eligibility requirements are still to be deterred by the additional costs added to their payments, and also by the big monster nobody is talking about, the ever-consuming corporate housing machine. But I got a whole new video for that later this week. Let's just focus on the harder eligibility requirements for new home buyers. Let me give you a perfect example actually. Say that you took a $500,000 mortgage at a rate of 3.11%. You would get a monthly payment of $2,138. That was as of December, only 4 months ago. Right now, with rates being 4.67%, this means your payment would be $2,584 per month, which in the course of the 30-year loan would mean an additional $160,698. When I saw this figure and compared to the calmness the media is trying to instigate on people, it became very clear to me that things are beginning to boil very quickly. Wages are stagnating, and though they have mildly increased as a result of the pandemic, they are still way behind inflation. Getting $3 extra per hour is not going to offset these loan rates nor the cost of life expenses on average, so really what we can best deduce here is that housing is becoming more of a luxury for the far and few top 10%. If you are young and married, or just in a solid relationship with someone and want to begin a family, you will need to be making serious money because the rate of growth for mortgage rates is not going to be cooling for quite some time either. And with all this information, this is where I want to begin to give context at the various effects that all of these changes are having in society and let you judge for yourself the severity of the circumstances. Not too long ago, I made a couple morning videos talking about child birth rates, and I made one video about Silicon Valley having to begin to directly try to help people afford housing since the problem is so bad that they have had to directly intervene to help out different regions and locals. Silicon Valley used to be a very expensive place to live, and has now become essentially unaffordable. This is a bigger deal than most realize, because the lack of affordable housing in that area has now been directly linked to declining school enrollments, which is the next big symptom of rising housing prices. A recent report by the nonprofit Silicon Valley Community Foundation found that building more housing would actually help reverse some of the long-term declines in student enrollment in Santa Clara County, California's 6th most populous state. Enrollment in school had declined by more than 15% in the country over the last 10 years, dropping from 253,625 students in 2020 to 212,501 students by a projected 2030. More concern is being pressed to try to help revive struggling school districts, with many in the South Bay actively planning to prioritize building new homes. Researchers and economists cite a lack of attention by the city's politicians and authorities as being the biggest issue, explaining that none of them are looking at whether school districts could benefit from more students or added housing. cities across California have already begun to experience serious student enrollment declines. In Cupertino, enrollment for elementary schools have fallen a massive 17% since 2015, less than a decade. In Palo Alto, it has dropped a disastrous 62% over the last 6 years alone. But it isn't just the lack of available houses that is at fault here. The decline of birth rates is now beginning to have its effect on the long-term economy, something that I have been chanting would begin happening months ago. Steady decline in birth rates across the entire country since the beginning of 2008 are going to have seriously disastrous effects. Even policy directors at Silicon Valley are saying it's extremely difficult for young families to purchase a single-family home, further emphasizing that even those that have decided to have children can't all get proper housing. A growing number of people are unable to simply afford housing in low-income neighborhoods, much less in medium-income cities, and city officials are now citing that they are struggling to build homes accessible to people with low to moderate income. State laws that once were meant to expand local housing are being met with fiery opposition. Because of these issues, there has been a mass exodus of people leaving the areas, which is having direct impacts on school districts. For those that cannot put two and two together, with such a rapid exodus of people means a lot of teachers and the like will begin to get laid off since there isn't much demand. This will drive up a new crisis as unemployment rises, further compounding the problem. More people leave because life is unsustainable leads to high unemployment because there is less demand. This means more funds will be needed to help these new unemployed people, which limits the ability for cities to budget much needed changes, which means even more people will leave the state, leaving it in a crisis of its own, and so on the cycle continues. If you might think these problems are just isolated to California, think again. It took me a simple Google search to find that even all the way across continental US, Massachusetts is also having serious enrollment declines. The number of school-going children in Newton South grew for a long time and has now become flat in recent years. Newton had a rate of 17% of students going to private schools, and it has now increased to 24%. Looking into this, it is clear that school enrollment declines are a factor in parents selecting for their children to go to private school. You see, as I explained earlier, enrollment declines have led to teachers getting cut, which has led to important school programs to get cut and class sizes to increase and even entire neighborhood schools to get shut down, leading students to get poorer educations. This has led to a bit of an exodus of people leaving, and parents who can afford to get a second job or have higher salaries to take on the extra expense of a private school so that their children can get a proper education. And like this, across pretty much the most populous states, the problem of housing is beginning to spill and cause huge gaps and damages to the fabric of society. Looking at what the news says, they cite a bunch of people repeating the same rhetoric. They acknowledge higher housing rates are bad but simultaneously say it's actually not that big a deal and that it's good for the economy as it is simply the effect of the Fed finally fighting inflation. The thing is, we didn't even have to be in this spot had the Fed had more oversight and not be allowed to print so much money to give handouts to corporations to pump their own stocks. Second, even ignoring the origins of the problem, the only beneficiaries in all of this are the rich and, more importantly, the big giant corporations, who have gone to great lengths to continue to expand and buy out, in cash, all the housing. While it gets harder for common people to afford a single-family unit, Wall Street finds no issues offering huge cash bids to home sellers, pricing the smaller pool of willing buyers out of the market completely. In fact, looking through the typical and popular media outlets, they have gone so backwards that now they are saying the rate by which births are falling is not even a big deal, promoting it as actually good because, and I quote the most common reasons they gave, shifting gender roles, more women in the workforce, children being healthier and children being costlier. Any smooth-brained ape can see that these aren't reasons why it's better for the birth rates to decline at the rapid pace they currently are. These are just weird observations with heavily opinionated takes that have little to no footstanding in economics and more with social sentiment. I don't have a problem with a society that wants to have less children, because these preferences are a result of the times and all the advancements we have made where we can give ourselves such choices. The problem is, the result we currently have is extreme because it isn't the result of people actively wanting to have less children with a society that can and is prepared to deal with the economic consequences of such choice, but rather much of the issues are a result of things like low birth rates and high unemployment because housing as a whole is being made next to impossible to achieve. It is clear and an objective fact, through scientific input, that housing provides the psychological and economic stability to promote proper stability to society. When you begin to make it next to impossible for people to reach this life achievement, you begin to have serious problems and put a ticking time bomb before things explode and collapse. We are indeed in a market bubble, though one which I don't think we are anywhere near to explode. I think things will progressively get worse according to all statistical value and data available, and that the problems will lead to further economic instability and volatility. Housing is not and should not be a luxury, it should be affordable to the vast majority of people. The implications of not having it so are costlier to everyone than not so. Only Wall Street is the one cheering right now as all of this is happening. I hope this little segment drove some much-needed wrinkles. It was a little recap on what has been happening before we being branching out to the more important events and stories throughout the rest of the week. Lastly, I want to address something. It has become apparent to me that many people hate the fact that I promote my Discord. They have called me a lazy shill and pumper looking to profit off of my own audience. In my Discord, everything but day trading alerts is free. We have a growing super active community that is talking GameStop and AMC and crypto all day among other things. Me promoting and maintaining this Discord does not take away anything from this channel. Correct me if I am wrong, but is this not the only channel with a sizable audience that has always remained GameStop and AMC focused? Did you see me pumping Dogecoin or Mullen or whatever other frenzy stock came up? Do you see me running advertisements for NordVPN or Shadow Raid Legends? I have stuck with GameStop and AMC as I promised to you last fall when everyone was worried about their favorite YouTubers abandoning the stocks as they become less popular and searched. I have now committed myself to bringing to you guys twice the amount of YouTube content that I have been for months. Believe it or not, YouTube barely pays me well. I make less than minimum wage a month on YouTube as my sole income source are my own day trades, so unless all these haters come together and decide to pay me a monthly allowance for me to run my own channel as they like, I really don't get why you all get so hurt over me talking for about 30 seconds per video about my own Discord. If it's really all that annoying, simply skip a couple seconds and enjoy the premiere content. YouTube is not good to grow and engage with an audience, as Discord allows me to conversate and answer questions, and because that has a lot of benefit to people holding GameStop and AMC, I will continue to do so. I will continue to promote people over to my Discord, and I am working on better angling how I advertise it here on YouTube so that it's quicker while retaining the same effect. I have seen a growing amount of trashing on me when I have literally doubled my content output and stuck with the same 2 stocks when I could have easily been pumping any other stocks and gotten paid a lot more for it, never mind the thousands of dollars I get offered monthly and declined for putting trash sponsored deals, so do give me a break. Now that I have ranted to the people trashing me for days, let me know if you liked today's video. I will see you all in the afternoon. I will still all of this video at the last segment of the afternoon video in case others missed it, so feel free to click off the afternoon video once I finish up with the charting recaps, which has until now been the last portion of the videos before I say my goodbyes. And that is all I have for you guys. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. If you join the $25 Patreon tier, you will have access to all things premium, where you can be part of a huge day trading community and get alerts to the best stocks to day trade with clear entry and exit prices. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day, keep on buying the dip and to the moon.